one thing I think that's on everyone's mind is how in the world are we going to expect this market to trade over the next little while? And I think there's a lot of reason for it. We've recently underwent a drop of over 30%, really 40%, and the recovery since has been insane. I mean, we're talking from low points. We've already recovered nearly 30% of that. That's right. Within a couple weeks, we nearly returned 30% of that. To where you see overall, year to date, the Dow's only down 17.8% from a absolute nightmare. From over 36% there. Recovery's massive, but year to date, the Dow's only down 17.8. That makes you think, is that all that this virus is going to impact? 17.8%, that's all that we lost? It makes it seem weird. And I know my opinion on it is a little bit different as well from a lot of people, but my opinion as far as what's going to happen here is going to be an interesting one, and I hope you enjoy it. So obviously there's been plenty of analysts out there calling for what they describe as a V-shaped recovery. So if you look at this, V-shaped meaning they bottom out right here, and then from there it goes right up. There's plenty of them that are calling for it. I initially thought that was going to be a decent potential. What I find very weird is obviously the amount of recovery we've seen, how quickly it is in a couple-week period. If we look at historical market crashes, so from Black Monday, it took 22 months to recover that 36%. 22 months. That's right. That's 2 years. So a downturn following the 9/11 attacks took 48 months to recover that 38% dip. And the 2007 financial crisis, down 54%, also took 48 months. 4 years is what it took to recover from that. So, and then obviously from then, just very good stuff. So, regardless if you buy at the bottom at that point, you're a happy camper. So, or if you buy anywhere while you're down, you're a happy camper. So, again, it's key to invest during these dips. It always is key. And in these historically, you've seen, if you look at these, you see a V-shaped recovery. You really do. Some of them are a little bit more drawn out, like this, like the one in 2007. But in 2001, you saw a 33-month decline. Meanwhile, they did in half the time in 2007. So it's a little bit more skewed towards the other side. But like Black Monday, obviously, this is only a 2-month decline. I mean, this is a one-day thing. So, of course, it didn't take as long to recover, you wouldn't think. As investors were like, what the heck happened? No one knew. No one understands what happened still. But right now, we're in the middle of a V-shape, and it's a very fast-moving V-shape. But what I also want to consider here is this is the fastest dip down we've ever seen as well. If you look at those other ones, 2 months, that's right, this is a month for it to reach its low point. 1 month, it dropped 40%. We dropped 40% on the market in a month. That is unprecedented. Obviously, the concerns facing us are unprecedented as well. There's no doubt about it. So I think the argument could be made that investors oversold, and they oversold way too quickly. If we're thinking about that logic, I do believe that this recovery is going to be a lot more drawn out than that. I think there's a chance we continue this upward trend, but it goes a little bit more drawn out from here. Now, my personal opinion on the matter is that I'm expecting more of a W-shaped. Obviously, let's look historically what we have here. I'm going to talk about what I think would be a W-shaped recovery. Look at this dip. That's what's so wild. You're going to see that in the charts, and people are going to be freaking out, like, what the heck happened? We look 10 years back, people are going to be freaking out. How did that happen? It's one of the most unprecedented things ever. But in my opinion, I think we're going to be more of a W-shaped recovery. I think we have a big thing ahead of us that will cause another downturn. Now, next week, I think it's going to be perfectly fine. I think we have some promising numbers in terms of a leveling off in terms of this pandemic in the United States. Investors will be happy. You've got insiders of companies buying like no other right now. All the insiders are buying their companies. But I do think we could hit another sellout. And what's going to cause that? It's going to be company earnings. So if we look starting the 20th of April, give us a couple weeks, right? Just a couple weeks. We are going to have earnings season kicking off, and it will be a scary, scary time. Pretty much every company is expecting a big decline in terms of earnings. Big decline. You have Starbucks anticipating 49% in terms of downward movement from its earnings. So, and I think some of that did get priced into the market, but I think with this such a quick recovery, I think investors forgot about the fact that some of these earnings are going to be horrible. They're going to be horrible. Now, not all companies, but in my opinion, the majority, at least, of companies, so really the market, let's say, is going to face an awful earnings season. It's going to be awful. Not all companies, there will be winners. But I think the market will trade in a W because of this. I think investors, this first week here, this is make or break for us. If this first week goes well, you have companies like Facebook, AT&T, Boeing, Tesla, Coca-Cola. Who else do we have? We got Netflix, Procter & Gamble, which Procter & Gamble should have a fantastic quarter, no doubt. But IBM. I mean, this is massive for these companies. You know what I mean? This is going to be a big, big thing for them. Okay? And if this first week goes well, I think the market's going to recover with that V shape. But in my personal opinion, here we go. This is what everyone came to see. They love to see my draw pad, don't they? Don't they? Ooh. Make this a little bit chunkier for you. Just a little bit chunkier. So here's our market during 2019, right? We're just going to go ahead and oh yeah. It's up. We're up massively in 2019. 29% up in 2019, right? And then the first couple months of the year, we, level off just a little bit, level off just a wee bit. And then guess what? February hits, we get some of the Ronies in our country, right? A little bit of the Roni. And guess what you get? Completely evaporating 2019. Completely evaporating 2017. You get a decline of 40% in a matter of a month. Right? So now we've recently come through, and you know what? We've recovered some of those gains. It's been a very quick recovery, V-shaped. So we're up now another positive, up 30% from those lows, right? But here's what I think is going to happen. Next week, we'll chart this on the right side. I think it's going to be a very boring week, nothing going on. And I think company earnings are going to hit, and I think we're going to find another decline of right around 10%. I think investors are going to get scared again. And then I think once we can finally get back out of this, so we're talking once we end lockdown, stuff like that, towards the more end of May, January period, when we get an announcement on when we're officially out of lockdown, I think we'll return and get a pretty quick recovery, all things considered. We're talking over maybe by, let's say, I think the Dow will be at 25,000 by the end of the year. Now, I think that's 100% insane of me. I think it's insane. But I also think the market's insane too. Just being 100% honest with you. The market has lost its mind, and I'm really just basing this off of the fact that investors have no clue what to do because this is such an unprecedented thing. But I do think as far as economically, we will do fine at the end of this. But I do think there is some concern here. So, see, I can write that. Look at that. Look at that. Look at that. You see anyone with writing that good on a mouse? No. But yeah, Dow 25,000 by end of year. And I know you think it may be insane, and it might be insane, but think about the fact that right now we're sitting at 24,000. 24,000. Investors are buying in heavy. And I think a lot of people want to get back into the market. And if we get positive news, people will get back into the market. And you've already seen it right now. You're seeing the exact same thing right now. We're in the middle of a nightmare situation, and investors are flooding their money in because they want the bull season to continue. And you know what? They're going to do everything they can to get this bull market to continue. So overall, we're talking about a year in which we only go down 10-something%, right? In total, maybe. It would be crazy if it happened, but who knows? Who knows what's going to happen? So, let's see. Obviously, just you gotta cover all your bases. Dow 29,000 at the end of the year, right? But that's what I have for you. I hope you enjoyed.